They don't want the financial system piling into Bitcoin, so they've made it restricted. So the ETF is a very dangerous tool. If a regulator doesn't like the asset that it represents, of course, suddenly trillions can go into that asset. Yeah, people have been, I think the whole system has been looking for quick fixes, simple solutions. And so the easiest thing to do is to buy the biggest, most liquid asset classes. Yeah, I think it's been good, steady progress. I mean, I came across Bitcoin in 2013. I watched the breakout from $100. I didn't own any. I didn't know how to buy it, but I watched the breakout. I was asking people, who knows about Bitcoin? And no one knew anything. The central banks are active in the gold market and have been forever. I don't think they would be in the Western central banks in the late 1990s were very happy to get rid of all their gold. They thought it was useless. And if you fire an active manager and buy an index fund, guess what? They sell all their small mid-cap stocks and then they put all the money into the largest stocks. No active manager in the world is overweight the largest stocks. Bitcoin becomes bigger and stronger every time.
We have the interesting topic about bold. I like that marketing term of like Bitcoin and gold. But before we get into the charts and all the things that you've prepared, maybe a little bit about Bitcoin, because the last time we spoke was January last year, and there has been so much happening in between with the ETFs, with the strategic Bitcoin reserve with Trump, and so much other things. How has Bitcoin evolved for you in the last couple of months and the last year, basically?
Yeah, I think it's been good, steady progress. I mean, I came across Bitcoin in 2013. I watched the breakout from $100. I didn't own any. I didn't know how to buy it, but I watched the breakout. I was asking people, who knows about Bitcoin? And no one knew anything. But eventually I managed to find some people and start learning, and my journey began. But I think what I've noticed that every few years or every cycle, call it what you will, the Bitcoin becomes bigger and stronger every time. And so these last couple of years, this cycle hasn't disappointed. We've had the US ETFs, which are a positive force when money's coming in, but they're a negative force when money's coming out, right? But the fact we have them, huge amounts of money has come in, something like $50 billion this year, or forget the number, but a big number has come into the network through the ETF, and that complements the European ETFs, the ETFs in Brazil, Australia, Hong Kong, Canada, all of these things, and then we've had the first genuine major country discuss it, with Trump and the Treasury, as you just mentioned, and that's really interesting because we've had El Salvador and other small places talk about it, but no one's taken it seriously. The only time you hear about Bitcoin in high finance circles is the IMF writing something rude, or the Bank for International Settlements writing something saying how it's just nonsense and doesn't work. And of course, they're all wrong. And it's not really the bank's view, it's just a paper that came out of that bank, and it's one opinion. But I think the fact that the US is taking it seriously is just shaking up so many things in so many places. And I think it's been a positive for Bitcoin. But, Robin, Trump came in November, everything went up, not just crypto, but the NASDAQ and other stocks, and now they're coming down. And Bitcoin has always been correlated with the NASDAQ and tech stocks, and all the time I've been watching it. It used to be more social media stocks than tech. More recently, in the last few years, it's become more general tech, microchips and so forth. But it used to be very much a social media stock. But I think there's only one social media stock in the world, really, and that's Meta, isn't it? It bought all the competitions. But basically, Bitcoin is a product of the internet, and so it's no great surprise that it correlates with the internet.
Do you think the correlation between Bitcoin and the high-tech stocks will at some point break?
I've been hoping that for years, and it hasn't broken. It has never broken. My thesis has always been that what's going to happen is that the tech bubble blows up and Bitcoin carries on. That has been my hope. And I still hope that's what's going to happen. Yeah, but it hasn't happened yet.
The tech bubble is interesting because we had already the .com bubble in 2000. Is that a continuation of the same thing that you're seeing, the same bubble basically, or is this something new right now? I mean, it has little to do with Bitcoin, but is the thing that you've seen 2000 similar to what you see now with tech stocks, or is that very different?
So the thing about bubbles is people tend to blame one thing, like the Big Seven or something, but actually the bubble's everywhere. It might show up in house prices in certain places. It might show up in other equity sectors. It might show up in certain bond sectors. It might show up in the auction rooms for fine art. And so, when there's a lot of money about, many, many different things go up. And in the late 90s, of course, tech was in the lead, but many other sectors were also caught up in it. And there were lots of corporate scandals in 2001, 2002 that were nothing to do with the internet. So those stocks were already down a lot, but there were other corporate scandals. And this time, you've got the whole private equity space, which is huge. No one really knows what's going on there. And then you've got all sorts of excessive government spending, which is now being cut, but it's so big that we wonder how we're ever going to get on top of it. And then you've just got other sort of hot parts of the market. So, for example, a stock like McDonald's trades, that sells burgers. There's no microchips anywhere. It's just burgers. And it's the highest valuation it's ever traded at in its history.
Yeah, those P ratios get out of hand. It's for me the cause of those bubbles are usually just like cheap money and money printing and too much into the system. Is that the only or real cause of those bubbles occurring, or is there something else also?
There's always lots of different things. We always look for simple answers to questions, but there are lots and lots of things going on. There's been lots of money creation in the last 5 years, but even before the pandemic, people were still saying that these stocks were a bubble, and so it's an old story that they've been highly valued. But it's also the consequence of indexation. And after the financial crisis in 2008, index funds became much more popular than ever. They were quite popular in the 1990s, but became even more popular since 2008. And they're now so big, I think it's $8 trillion or something of money in the index funds. And if you fire an active manager and buy an index fund, guess what? They sell all their small mid-cap stocks and then they put all the money into the largest stocks, right? No active manager in the world is overweight the largest stocks. You think about it, it's very simple maths, right? No one has got, more Apple than the index and more Nvidia and more Google and stuff like that. So any active manager is going to be going, no, the opportunity is not up there. It's down here. It's all this stuff that's cheap and small and mid and new and fast growing. So they own all that stuff. And basically the capital has gone away from being spread far and wide in the economy and concentrated in the world's largest companies. It's a strange situation. You wouldn't make it that way. You wouldn't, even though all the individual arguments like indexation is low cost, simple, etc. The consequence of lots of logical thinking has created the biggest bubble in the history of the world.
Yeah, and it's crazy how people misuse it as savings technologies. They just buy the ETFs and the stocks as a savings vehicle. But it's logical. They have to use something because they cannot use the euro or the dollar. So they flee in something else. And my hope is that they come more and more into Bitcoin, but it takes some time till this actually gets. It's also the correlation, I think, is also there because Bitcoin is, comparatively still in the same, bucket size as an Apple or as a Google or a Microsoft from market cap perspective. It's not a far range to gold still. I think 10x or 15x, something along those lines, where that needs to go. And then there's volatility and all those things. So it's probably also because it's just too small to break the correlation, I guess, and too early.
Yeah. I mean, if we think about, Bitcoin being a $2 trillion asset, probably isn't any more after the fall, but something like that. And the world is $500 trillion of assets of, bonds, equity, and real estate. And there's some other things as well. Obviously, gold is 20 trillion, Bitcoin too, and a bit of other stuff. Even the license plates have value, art on the walls. You add it all together, it all counts. And, people have been, I think the whole system has been looking for quick fixes, simple solutions. And so the easiest thing to do is to buy the biggest, most liquid asset classes.
Where do you see Bitcoin actually going long term? When we're now even seeing governments having strategic Bitcoin reserves, do you foresee also central banks using it as a hedge and buying it?
Not yet, but maybe one day. It's possible. The central banks are active in the gold market and have been forever. I don't think they would be in the Western central banks in the late 1990s. Were very happy to get rid of all their gold. They thought it was useless. But then since that time, since the late 90s, the price of gold has been rising a lot. Yeah. And it's up, more than 10 times. Okay. That's nothing for Bitcoin, but, it's gold. It's a 5,000-year-old asset. It's up more than the S&P 500 this century, including dividends. Yeah. So gold's done very well in the last 25 years. And the Western central banks still aren't talking about it. I mean, the US has just decided to do an audit of Fort Knox, right? But no one else has. I mean, no one in Europe or Japan is talking about gold. But in the non-OECD countries, China and the Middle East and many of the Asian countries and African countries and Latin American, they've been accumulating gold since 2009, and no one told them to. So they're very interested in having diversified alternative assets, but they haven't yet selected Bitcoin. I think if the US kicked off and actually did have a formal reserve, then other people would start thinking about it. But there's a long way to go because, for example, in the UK, the Bitcoin ETF is still banned for retail investors. So it would be weird for the central bank to own Bitcoin, but then the people were not allowed to own it.
Wait, in the UK, you cannot have the Bitcoin ETF?
No.
Interesting. I didn't knew that. Interesting. But you can hold Bitcoin in itself, right?
You could own Bitcoin. But I think the reason they've done this is because they want people to own it in small quantities. They don't want the financial system piling into Bitcoin, so they've made it restrictive. So the ETF is a very dangerous tool. If a regulator doesn't like the asset that it represents, it's a dangerous tool because suddenly trillions can go into that asset easily. Yeah. So by making a block and saying, okay, you can have an ETF listed in Switzerland or Germany, like I do with my Bitcoin and gold bond. You can have this product, but we're going to prevent people from buying it, in our country. So that makes it difficult for it to grow, and it means from their perspective, these things can never get out of control if that's the regulatory objective. Now they don't have a problem with you buying Nvidia. They don't have a problem with you buying gold or bonds or anything, just Bitcoin and crypto.
Then what they are essentially doing is just cutting themselves off of Bitcoin because Bitcoin ETFs in America are flowing, and in Europe they're flowing, in other countries they're flowing. So they just basically restricted their own economic power in that way, from what I see.
Robin, I'm not sticking up for regulators. I don't agree with what they do, but I just tell you what's happening. And Europe is not free on Bitcoin. So there are some countries that are more free, right? Like Switzerland, Germany. But then other countries are Finland until recently has been quite restrictive. Portugal, Spain more so was quite restrictive. Ireland was restrictive. And a lot of them were confused. I mean, Sweden was the first one to allow the ETF. And then they sort of almost didn't realize they had done it in 2015. And so there was lots of surprises. I think everyone's looking around wondering what the hell this thing is. And it came from nowhere, and it took regulators by surprise. But for example, UBS in Switzerland, okay, a big Swiss bank, Bitcoin is banned. So no one in UBS, no private banker in UBS will take an order for a Bitcoin ETF. And the same is all the big banks in London. They won't trade it.
But from what I understand, they own MicroStrategy. The central Swiss National Bank has, I don't know, it has been some months that I read that, and I did not investigate further. But I think they own a portion of MicroStrategy somehow, which is funny. I don't know if it's actually true. Maybe it's just because of the Nasdaq 100, also an indirect exposure.
More likely they would just own the Nasdaq, and then therefore they have some MicroStrategy. But MicroStrategy. I mean, I'm not a fan of MicroStrategy. I mean, you may well be. But it's a regulatory arbitrage because so many people can't buy ETFs in Bitcoin even in the US, a lot of platforms restrict Bitcoin ETFs. Yeah, even though the law says you can. The Vanguard platform, I think the Merrill Lynch, I'm not quite sure exactly, but the Vanguard platform doesn't allow Bitcoin ETF to be traded. And so, large amounts of the American financial system have blocked it. And the private banks and the discretionary wealth managers, a lot of them will not play. So if you look at who owns the iShares Bitcoin ETF, it is not your typical wealth manager. It's hedge funds and family offices and these kind of people. So it's wrong to say that Bitcoin's out there free in the financial system. Most places have either banned it or shadow banned it. So, for example, you can't trade the Bitcoin ETFs, as I said, UK. You can't trade them in Japan. You can't trade them in Singapore. You can't trade them in Thailand. The list is quite long.
Then it's interesting that the Bitcoin ETF is still so successful. Like it's a huge amount of inflow, and even though Vanguard, I remember that was a huge news story of we're not doing, and then you saw all the Bitcoiners screenshotting their bank changes from Vanguard to something else and stuff like that. I remember that in Twitter, but it's interesting how. What wasn't it the biggest inflow of any ETF from BlackRock? You probably know that better than me.
Yeah, it was huge. The numbers were record breaking. But the reason to be bullish Bitcoin is because of this argument. Because as you say, it's achieved a lot, $2 trillion asset class on the back of mainly retail money certainly for the first 14 years. Yeah. And small amounts of European ETF and Grayscale, of course. Grayscale GBTC played a very strong role before 2020. So there were routes to market for institutional money, but there were fewer. And the bull argument for Bitcoin from here, in my opinion, is that the global wealth management industry is roughly a quarter of all the assets. Remember I said the assets were 500 trillion? So let's say a quarter is 125 trillion. Yeah. Their allocation to Bitcoin is approximately zero. Now, they own some gold, but they don't own any Bitcoin. They own maybe 1 or 2% gold, but they don't own any Bitcoin. So all you have to think about is that changing? And so, maybe it won't happen this year, it won't happen next year, but at some point in the future, it will change. And when it changes, then there's continued large inflows into the Bitcoin ecosystem, just like we saw in 2024 with iShares and Fidelity and 21 Shares, these firms put lots and lots of money into the ecosystem, and that will just continue. And I don't think it's going to be an overnight event. I think it's going to be a series of small events. This country relaxes the rules, that country relaxes the rules, this firm gets interested, this sort of thing.
Interesting. Quickly on the note of Mt. Gox, that was super funny to see that. What do you expect happening from the audit that might hopefully happen at some point?
What, on Mt. Gox?
Yeah, the Mt. Gox audit. I think Elon was posting about it, and now they might actually do it.
Do you mean Fort Knox?
Oh, Fort Knox. Sorry, not Mt. Gox was the exchange, right?
2013 Japan, and Fort Knox is the James Bond film Goldfinger. Yeah, I mean, I think the gold's there, and I personally don't believe there's a problem in the gold market, but lots of people do, and I think they always will. One of the reasons why is because gold's so simple. It's the one reason, one of the reasons where Bitcoin is vastly superior to gold is on the transferability. We recently saw people taking gold from London to New York. And of course, what that means is 3 men in boiler suits go to the vaults, they count they take the bars, they polish them, they send them to Switzerland for refining, for a new shape, and then they send them to America. It's a crazy process. Whereas in Bitcoin, very simple. But then other people say, okay, well, gold's physical. I like the physicality. Some people don't. Some think it doesn't matter. And then you've got things like, the Bitcoin network. You need the miners to run it. Whereas in the gold ecosystem, you just mine it once and then there's no power consumption afterwards. And so there are different views. And I come back to it and say, it's not a matter of better or worse. They're just different. Yeah. The only thing they have in common is the supply side equation. Yeah. where Bitcoin, and actually Bitcoin's inflation rate now is lower than gold, but so what? They both have a very high stock to flow ratio. And so that's important. That makes them scarce assets. They're both highly liquid assets. So they're both good for long-term store of value.
That's interesting. That's a very interesting perspective because a lot of people compare Bitcoin and gold all the time. And if you look at it, they don't have, I mean, the characteristics, the properties, if you look at that, there might be some similarities. But even there, even from a supply, like gold, there's continuous supply. Bitcoin, it's just not scarce, it's limited. Like there's just a cap that will be reached one day. You can even make the argument that we're just going down in supply because people keep losing it, and doing that. So, and then the one is digital, and the other one is physical. So there's actually a lot of differences, but I think because of the continuation and people also calling it the digital gold, and that narrative just brings them so close together and even seen as a competitor. And I don't know, like if you see, for me, real estate and ETFs, all those index funds and the savings vehicles, that's a bigger that's a bigger competitor for Bitcoin. I feel like if there's a competitor, because I don't know if there's no second Bitcoin for me, so there's not really a competitor, but they compete for different financial energies. And what I also don't like in gold versus Bitcoin debates is like gold bucks as like people that don't like Bitcoin and only like gold, and Bitcoiners that only like Bitcoin and don't like gold. Both are kind of in the same team. They're rooting for the same thing. They just have a slightly different solution, but overall they agree on like 99% of the problem, 99% of how they look at the financial markets. Just that he likes gold and he likes Bitcoin, and that's how most Bitcoin versus gold debates are. And I told you that before that we started the podcast. I actually never. Like I thought that Bitcoin is a scam and gold is useless before I was orange pilled. And then I got orange pilled actually with a gold versus Bitcoin debate. And through Bitcoin, I actually got to understand and appreciate the value of gold. Without Bitcoin, I probably would never have looked at gold, which is an interesting thought of not only gold brings people to Bitcoin, but also Bitcoin brings kind of people to that gold narrative. I don't know if you have thoughts on that.
Yeah. I mean, there's a lot to say. I mean, you rightly say that all assets are in competition in some extent, of course, because I have $100, I want to invest it, and I want to put $2 into real estate and $5 into gold and how much in Bitcoin, and we make these decisions. So to some extent, that is correct. Assets are in competition. But I think we can segregate the assets, and you've got equities and bonds and real estate, which to my mind are financial assets. All right, it's all about fiat money. Yeah, they're in business to pay out dividends, income streams in fiat money. Yeah, Bitcoin and gold are alternative assets, and they're the world's two most liquid alternative assets. So what else? So you've got Bitcoin in digital, and you've got all the other stuff, Ethereum and Solana and its friends. And then you've got in commodities, you have gold, and then you have the other precious metals. The silver silver and Ethereum are quite similar in the sense that Ethereum is more volatile than Bitcoin, and it's less liquid. Silver is more volatile than gold, and it's less liquid. Yeah. So, you can own gold and you have more liquidity and less volatility. You can own Bitcoin and have less volatility and more liquidity than if you own Ethereum. Okay. So the number twos are not as strong in terms of quality of the asset, in either liquidity or volatility. Then we've got other things. So we've got copper and oil. Oil, of course, is a very liquid market, but you can't physically store large amounts of oil. There's also got a terrible stock to flow ratio because we consume it, and the same with agriculture. Then you've got other alternative assets such as art and wine and sports cars and collectibles, but these are not liquid assets. And so when you break it down and think about all the possibilities in the world of alternative assets, things that don't have cash flow, Yeah, they do not have fiat cash flow. Then Bitcoin and gold are the two most liquid alternative assets in the world.
Are there any other? I mean, yes, there's like arts and you mentioned it, like an art and stuff like that also has no cash flow and has like, but Bitcoin and gold is the only big ones that are liquid and available in big quantities. Yeah, that's an interesting point of like dividing it with like financial assets and those where there's like no cash flow. That was one big jump for me to come over the hurdle of like an asset doesn't have to have a cash flow. I really did not want to invest in anything else.
So Robin, what's happening is you find the misinformed people say, Bitcoin, gold, they don't have cash flow. Well, of course they don't have cash flow. They're alternative assets. And that's the definition of an alternative asset. Yeah, it's outside the financial system. So if the financial system goes wrong, then you can own something that's not connected to it. Yeah. Now, of course, you can still have a margin call because speculators might be long gold and long Bitcoin, and they can still suffer in the short term. But once that phase is passed, it's no impact. Yeah. So if you're walking through a country and that country is going bankrupt, yeah, and you hold Bitcoin in one hand and gold in the other. I don't know how you hold Bitcoin, but you know what I mean. You walk through that country with Bitcoin and gold, it's fine. The fact that the shares and the bonds collapse doesn't make any difference. And the real estate, you just keep on walking and you still have Bitcoin and gold. Yeah.
That's a good thing. You can keep your Bitcoin in your brain and you don't have to hold it in the hands. Might be good in the airport.
In your brain. Yeah, exactly.
Really cool. There's so many more topics, but I think I want to get into with the charts that you sent me previously, which is super interesting, of the ETF inflows, Bitcoin and gold, and how they are uncorrelated, correlated of like the opposite correlations. What are we looking at here?
Okay. So this is the Bold report, and the website's bold.report. It's free to all. You can download all the information, help yourself. And we talk about the Bold index, and there's a menu on the left, and we talk about gold and Bitcoin and ETF flows. And this chart is in the compare section, the ETF flows, where we look at the dollar value of all the global ETFs, gold and Bitcoin money going in and out of the ecosystem. And I think that anyone can figure out very quickly that this is the rate of change 90 days in US $1 billion of money going in and out of gold Bitcoin. So on the left, we've got, in 2020, we've got a huge amount of money going into the gold market. Then it all comes crashing out. And guess what? Money starts going into Bitcoin for the first time in big size in late 2020, 2021 through the ETFs. Then the opposite happens. Gold comes back in 2022 after Ukraine invasion. And then a little bit of money comes out of the Bitcoin ETFs. And don't forget, the ETFs aren't that big at this point because we haven't had the US launches. But then there's small outflows from the Bitcoin ETFs in 2022, and the money comes back into gold again. And then we have the US launches and the run up to the US launches. Huge amounts of money going to Bitcoin, nearly $20 billion over a 90-day period. And we've had outflows of gold at the same time. And Robin, can you show the present date? I think you moved the chart a bit. So just do 5 years. Yeah, fine. And so so recently in 2025, we've had Bitcoin going from huge inflows, $20 billion inflows, as Trump was elected. And we've got the hangover from that. It's not a big deal that once you've had $20 billion of inflows, for them to flatten off. And perhaps, Robin, on the top right, if you make it 30-day flows, then that might be helpful. And maybe set the chart to 2 years. Great. You're a good operator. You're good at this, Robin. And,
yeah, I'm doing it every day now.
and just look how strong. Occasionally the correlations have been in sync, but look how strong they can oppose each other, like we saw in end of 2024 and now. And so investors are basically interested in gold or Bitcoin, and they tend to choose. Occasionally, they might be buying both or selling both at the same time, but generally they make a choice. And that choice is very simple. When it's risk off, when the world's in shit, you prefer gold. And when things are going well, you prefer Bitcoin. It's the same decision as bonds and equities. And so, every traditional investor looks at their portfolio and says, how much in bonds, how much in equities? And I'm just making the same argument that if you wanted to make a portfolio of alternative assets, you mix Bitcoin with.
Super interesting to look at also that correlation is so big. I mean, especially if you look just here, where obviously the Bitcoin ETF in America launched that spike here, and then there was another spike here that's super fascinating. What do you expect? Because a lot of people told me last year, ETF first year is great, but they expect actually that the ETF takes like 1-2 years to really get going for Bitcoin, because things are just taking a little bit longer, decision-making trees in companies, and those high-net individuals might be longer. Also, people want to see some history of the ETF to see what the performance is. How big do you think will be the Bitcoin ETF going forward compared to the first year to the coming 2, 3, 4, 5 years?
Well, you've got the chart. So if you go to compare on the left-hand side, the bottom one, the very bottom one, ETF holdings, right at the bottom, no, right at the lower there. That's Bitcoin and gold total AUM in all the world's ETFs. For Bitcoin. So basically Bitcoin's about $100 billion and gold's about $270 billion. And the total there in green, which you can see is approaching 500. So that's the landscape. I mean, it's just going to keep on growing. As I said to you before, the wealth management industry, that is the target, right? So there are $500 trillion of assets. 3/4 of those assets are held in own name. Maybe it's a pension fund or it could be just rich people or private houses or whatever, other governments. But about 1/4 of it is people's wealth, and that is the target. You're looking for a $2 trillion. You're looking for a 2% inflow from 125 trillion. That's what you're looking for. So $2 or $3 trillion to come into Bitcoin over the next 30-40 years. I mean that's how I would suggest it. Yep. And so that's, all the money in Bitcoin today is 2 trillion, and that's just the ETF portion. But of course, most of that money would come into ETF because, the big money is not going to buy a hardware wallet and worry about keys. They're just going to buy a solution that's got insurance and professional custody.
Let's take a break for a moment and appreciate the beauty that Coin Vigilante has made with the Bitcoin watches. Those watches are the most amazing, the most elegant way of showing that you are a true Bitcoiner. And Coin Vigilante just dropped a completely new and amazing Genesis edition of their watch collections. You have the date of the first ever mined Bitcoin block in there, and of course also the block height and which epoch we are currently in. I love the level of detail they put in this masterpiece. Make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. And now if you have Bitcoin, I really do hope that you don't have it on exchange. But if you do have it on exchange, I have 2 ways for you to deal with that. The first way is you put it on a hardware wallet. That's the entry for you to get into the self-custody game. I recommend BitBox, Bitcoin only edition for that. It's a super simple and secure way. And if you check out the link in the description, you even get 5% off if you use the code Robin. And the second way is the Bitcoin Way. The Bitcoin Way is your all-in partner in terms of how to get the most out of your sovereignty. They will personalize for you a self-custody setup that is perfect for your individual situation. They will show you how you can secure your own devices. Securing your Bitcoin is not enough. You also have to keep all your devices secure. One topic that is overlooked often is the inheritance plan. What happens with your Bitcoin once you are no longer here? Do you have a plan for that in place already? And last but not least, if if you're in the jurisdictions where you don't feel safe, it's better to get a plan B. For all that, head over to thebitcoinway.com/Robin to get a 30-minute free call. And just a quick side note, I will be for the first time ever speaking at the Bitcoin Prague event in June. It will be absolutely legendary, and I'm really looking forward to seeing all of you there. You can get your ticket in the link down in the description of Bitcoin Prague, and very important, use code Robin to get 10% off your ticket. I'm really looking forward seeing you there. How do you actually look at custody of gold and Bitcoin? Because both you can hold either in banks, exchanges, or like in ETFs, but also you can hold it yourself in self custody with gold, maybe a little bit more costly to hold it yourself, depending on how much. But how do you look at keep getting your own self custody in gold and Bitcoin?
I mean, it's not something I would consider. Yeah, it's not something that interests me because I'm not forecasting the end of the world. And if I was forecasting the end of the world, I would want guns and food, food and guns, and so, if the world was ending, what use is the money going to be? So I kind of making a simple assumption that the system will continue. And so therefore I trust the system of custody. I always have done. And obviously, you have to make sure you use good custodians. I mean, in my product, in Bold, we use JP Morgan for the gold. So there are three main custodians in London: UBS, HSBC, and JP. And then for Bitcoin, we use Copper, which is one of the leading custodians in the business. And that enables someone to pick up the phone and put a large order in and transact immediately at a tight spread. If everything's in cold storage or in deep vaults or something, then you can't do that. Then you lose liquidity. So I think the mechanism of custody is very powerful and very effective for the financial system we have. Now, I know lots of people listening will not trust JP Morgan for gold and stuff and believe stories they've read. It's just not true. I mean, it's a great custodian, and the gold is held separately in what's called an allocated account. It's not lent out or leased. And I think whatever you say about gold, whatever you do to placate people and say that there's no problem in the gold market, there'll always be some dickhead on the internet who'll keep writing stories and people will believe it. And this is going to go on and on and on. It's one advantage that Bitcoin has because you have an address and it's much simpler. It's like a bar number almost, but it's much simpler to keep an eye on what's happening and where the Bitcoin is than it is for gold. It's got that transparency. So it's one of those, it's a clear Bitcoin advantage. The audit trail is incredible.
Yeah, you can clearly make like proof of reserves of like, hey, this is just the address that we have, and there we store all our Bitcoin, and there we can see it. That's just something. I hope we come to a world where it's normal for every exchange, custodian, ETF holders, like to have a proof of reserve where you can just look at like, oh, that's actually how much Bitcoin they have. That makes sense. More and more people make it. More and more institutions are actually going ahead and doing that. And I think it's a healthy thing to bring transparency in because we have that feature in Bitcoin. And I hope more and more institutions are using that, and that's a really good thing. And it's interesting because I have a Bitcoin only audience, and I make a lot of advertisement for self custody. I'm like, okay, even if you don't want to do it, at least learn about it so you understand Bitcoin better. And still, even though I make a lot of advertisement for self-custody, around 50% do it, around 50% don't do it. So that's, I think, usually the split. In other audiences, a little bit more even of people that don't do it. But yeah, there are solid reasons of why you should have self-custody and not trust some exchanges. But if you have it on some good exchange that has been around for a long time, maybe it's not that big of a deal. But I always say like, hey, get it on the exchange. It's way safer, also against hackers. Like, people can get hacked way more easily on exchanges, on centralized platforms, than if they have it in cold storage. And it's not as complicated and not as expensive also in terms of doing it. The ETF fees are most likely more than what you use for the self-custody. But yeah, I agree that we need as many different custodian options for people that want to do it or not do it. Even though I don't believe the world will go to hell anytime soon, I still prefer having my own Bitcoin somewhere where I have some control over it.
Yeah, no, I take your point. I think with crypto exchanges, yeah, obviously you shouldn't leave money on those. I think we learned that years ago. Back to Mt. Gox. That's where we learned that lesson. But the ETF structure is not, leaving money in an ETF is not leaving money on an exchange. They are using cold storage solutions as well on your behalf. And the other thing is they have insurance. If things do go wrong, then you should be made good, touch wood. I mean, it's never been tested because we've never had a problem in the ETF land because it works so well. And that's because you're using financial infrastructure that's been around for a long time. It's been tested.
I do agree with you a lot on that. One point that I forgot to touch on is if you think because people actually bring that up as a negative point against Bitcoin, it's like, oh, like, what if all the electricity is gone and like we're going back to like Stone Ages? I'm like, yeah, but I don't know that. Then you have to have a totally different strategy anyways. Like then you should live on some farm, get a lot of cousins around you that can help you build some farmland out and get a lot of guns. Like, the world will be very different. And those are usually people usually bring that argument up in like with a MacBook and a Starbucks and in living in the city. So like you need a whole different setup of your life if you really think the world is going that way. And I do hope that we don't go in that direction anytime soon.
If you have that situation, then cities implode, and the countryside is the only place to be. And but I don't think it's much point. I don't think owning Bitcoin and gold has anything to do with that. Yeah, that's an extreme scenario. I think we're just talking about alternative assets that are liquid and they have a place in the system. Why do people own gold? Well, the central banks own gold, so therefore that's okay. Most people own some gold personally, particularly women around the world, some men too. So that's distributed. And in Bitcoin, that journey is younger, but it's still ongoing. More and more people own it. And so I think that it's important to recognize that one of the strengths of both assets is they are widely distributed and very, very liquid. And the volatility of gold is about 15%, which is quite low. It's a bit like the S&P 500 or the Euro stocks, quite similar to that. Whereas the volatility of Bitcoin is about 40%, which is more like an oil stock, or a natural resources stock, something like that. It's not, or a steel company. It's not that high anymore. And the people talk about how Bitcoin's volatile. It really isn't. Junior crypto is volatile, but senior crypto, which means Bitcoin, isn't.
I don't know if I actually asked you that in the last episode. If I did not ask it, it's good that I ask it now. If you could only have one of those two assets, which one would you do and why?
Because I'm old, I'd just choose gold. Because I have total faith that. So the scenario I would ask is, you're going away for 10 years in a spaceship and you're coming back. What are you going to do before you go? You have to choose one. If you're coming back, I have certainty that gold's going to do a good job. But I think there's a very small chance that Bitcoin goes wrong. It's a small chance. I think there's a large chance it does well and a small chance it does badly. Whereas I think Bitcoin, with gold, I think there's much more certainty it's going to be quite boring. But it's going to be okay.
Good point of like in 10 years, gold will probably not do the performance of Bitcoin. But the chance of gold going away, like almost zero. Nothing for me in risk is anytime zero, but Bitcoin because it's only been around for 16 years, there's always a black swan event that possibly happen. I would still go with Bitcoin.
Should, you're young,
just because I'm 25.
You're a young man. It makes sense, right? I mean, don't misread it. I mean, I want to own both, so my product owns both, and I want to talk about how much of each, right? So some people will say, 50-50, own Bitcoin and gold. Great. The problem with 50-50 is you haven't maxed out the pair, because the chance of losing, if you put $100 into Bitcoin and gold, 50 into each, the chance of losing $1 in each asset is more likely to make or lose $1 in Bitcoin than you are in gold, right? Whereas if you do risk weighted, which is what I do, which is related to the volatility, you end up with 3/4 gold, 1/4 in Bitcoin. And now your chance of making or losing $1 in each asset is the same. So that's what we mean by putting the same amount of risk into each asset. Yeah. Lots of gold, a little bit of Bitcoin. And of course, if gold was more risky than Bitcoin in terms of volatility, then we'd have more Bitcoin than gold. And so this very simple thing, and because they have low correlation or negative correlation, as we saw in those charts earlier, one goes up, the other goes down. These things offset each other routinely all the time. When you see Bitcoin up 10% in a day, gold's probably down. When you see a good day for gold, Bitcoin's probably down. Yeah, it happens more often than you think. And if you start observing the two together on the days, you'll go, my God, it's very rare that they're having a good day at the same time. Sometimes they do. Sometimes they both have a bad day. But just quite often, they're just against each other. And so that's why it's very important. So the whole bold process is about rebalancing. So the reason why you keep the risk correct, which is roughly, we publish the numbers, it's free on our website. But it's roughly 3/4, 1/4. But then you rebalance every month. So you're buying the one that went down and selling the one that went up, bringing it back. And that adds another 5 to 7% per year to your return. Now, I know to a Bitcoiner, that's no big deal. But, to a TradFi investor, to have the return of Bitcoin and gold and another 5 to 7%, it's very nice.
Do you think there's the risk of gold being, how do I phrase that? Because we're getting in a more and more digital world, and people like to own something more and more digital, and they, like, for example, me, I wouldn't even be talking about gold without Bitcoin in my environment. The people, let's say under 35, when I talk about investment, they either do ETFs or Bitcoin. So they are either not believing in Bitcoin, and then you do the ETFs, or they're doing Bitcoin, or a mix of that. Is there a risk that that gold is going down to the, let's say, utility gold, jewelry value, whatever the percentage is, without the monetary premium, if maybe like governments and central banks long term hold Bitcoin instead of gold?
That's always a risk, that something else comes along, probably Bitcoin, and gold becomes irrelevant. But given that China is buying 1,000 tons or whatever at the moment, every quarter or year or something, and they're all just buying it, right? So it's not happening this month. Yeah. It's not happening this year. So maybe your view in 10, 20, 30 years' time is possible. Absolutely. But gold has changed its role. Gold's been in the financial system for 5,000 years, and its role has never been constant. The only constant thing has been the brand, the element, and the fact that and the recognition, so it's been used in jewelry and, portable money, portable jewelry. And also you take gold from one side of the world to the other 500 years ago, and everyone's happy. Yeah, I can deal with that. The Visa card of its day. Yeah. You turn up with gold, other side of the world, no problem. Get business done. And that's a real thing. Yeah. So it's had different roles over the years. And then in the 20th century, up until 1971, it had a formal role where currencies were pegged to it. And of course, most of them couldn't stay on that peg. So there were devaluations every now and then, as is always the case in a fixed exchange rate regime. As through history, we've seen them always come under pressure. Asia in the 1990s, the euro's still working, but a lot of people say, well, give it time. So these things always come under pressure. It's very difficult to manage exchange rates across two countries with central planning. Yeah, and so gold's come out. Gold's had many different roles formal and informal. Currently, gold has an informal role in the financial system. No one told China and Indonesia and Qatar to buy gold. They made their own decision. Yeah, they chose to buy gold. It's not written down that they should have these gold reserves. And that's an important point. So they can make their own decision about Bitcoin when the time comes. And I think if the US start the trend, maybe people will start to get interested. But you need one big country to come in. And, I think it would be great. It'd be great if the US underpinned Bitcoin. I don't think they need to, because they can tax, if American citizens buy Bitcoin and it goes up, they sell it, they pay tax. So, the country benefits, the US government benefits from appreciating Bitcoin anyway. So why would they do that? They would say, okay, well, we want to have a reserve that's got risk-on qualities. So at the moment they've got gold, which is a risk-off quality, but they'd have to make a case why they wanted a reserve with a risk-on quality. I'm sure they could make that case.
It's super interesting for me that America already now framed it as a strategic Bitcoin reserve, and that step, which just comes very early for me. I did not expect that at all. Like, Bhutan, yes, a very small country, which is smaller than Vienna. They are buying Bitcoin. Okay. El Salvador doing things that's great. But a force like America honestly shocked me, and it's still I'm still in disbelief that they actually did it. It was like something like maybe 2030, 2035 or something like that, but 2025 seems very, very early. And then it's like, okay, if America does that might trigger something in the UAE. Maybe China is doing secretly already something. It's the whole game theory aspect is really fun to talk about.
Yeah, and I think that one thing about Bitcoin is it's never been dark. In all the years I've been following the Bitcoin stories, it's always been fascinating. I mean, my favorite one, although the last couple of years have been pretty interesting, my favorite one of all was, how the whole banking system tried to shut down Bitcoin, 2013, 14, 15, and they came back with a stable coin. Why do you need Ethereum? So you need Ethereum to drive stable coins. Without Ethereum, you can't have a stable coin. Some people would say you can have it using Bitcoin, but basically, we have these token platforms, and they enable lots of different things to happen. But ultimately, they enable you to bypass the banking system, and that's incredible. It's absolutely incredible. Now you can have $100 and move it across the internet without a bank. That is incredible, and it's all an own goal from regulators. It would never have happened, and the speed and success that it currently has if they hadn't been so obstructive to the banking system hadn't been so obstructive to Bitcoin.
Absolutely, really cool. By the way, what message do you have usually to people that don't like Bitcoin and are big into gold, like Peter Schiff? I mean, even recently he almost came around calling Bitcoin digital gold. But for people that liking gold and they're like, why do we need this Bitcoin thing?
My message is just be open-minded about all assets. I mean, you don't have to own everything. You don't have to like everything, but it's got its place. I think if you've got a market like Bitcoin that's as big as it is after all these years, and it's been through all the challenges and tests that it has, and it's got the liquidity and the widely distributed ownership and market depth. You can't ignore that, and you have to be. I can understand if someone that doesn't understand finance would say, okay, it doesn't mean anything to me. That's fine. But anyone understands finance. If you ignore it, then I think you should look in the mirror and think and say, maybe I should go back and understand finance again, because I'm clearly missing something that's pretty big and real, and it's out there. Yeah, Ponzi schemes don't last for 16 years, and grow and grow and grow. The Bitcoin is many things, but it's not a Ponzi scheme, and it's a digital asset. And if you can't get your head around that, I mean, I find that extraordinary. It's so obvious that we were always going to have digital assets. I mean, you have to look at Total Recall with Arnold Schwarzenegger when he's traveling to Mars, and he's the price is 5 credits, and that this was telling us in sci-fi that we are going to have this kind of digital money in the future, and it's here. And so I find that very exciting. TradFi, I don't like Bitcoin because they didn't invent it. It didn't come from Goldman Sachs. It didn't come from the central bank. It didn't come from the ECB or the IMF or the alphabet soup. It came from, and it's a sort of revolutionary idea, and they don't like that, and that's the problem. No one's in control. The thing that, and the hilarious bit about Bitcoin is you've got a complaints department. Well, call Bitcoin complaints department. Call the CEO, get a statement. There isn't one. There is no complaint department. There is no CEO, and the same is true with gold. Everything in finance, real estate, bonds, equities. There's always a CEO. There's always someone responsible. In alternative assets, no one's responsible. There's just ownership.
TradFi cannot deal with that. I like that. I think last time I actually did not ask that because I didn't have the routine, but I now asked each and every one of my guests what we can learn from you besides Bitcoin.
Oh, well, Bitcoin's my night job and gold. My day job is TradFi research. And so at ByteTree.com, we do lots of free stuff. We write about gold and Bitcoin and lots of stocks and markets and things. And so, feel free to look at what we do. It's out there. And I think we do a good job.
Very cool. Thank you so much. We have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And it's an interesting question. What does currently stop businesses to adopt Bitcoin?
Well, I think the whole Treasury thing is a fashion on Bitcoin land that's not in the real world. Most companies, the idea of corporate treasury, you ask, why do you have a treasury? You should just pay out the money to shareholders or buy back shares or pay dividends. Well, why are you sitting on large amounts of cash? That would be the traditional investment view. Companies should not have large amounts of cash. They should have enough, but not too much. So why have a reserve is one reason. And two, if you do, the current thinking is own cash and bonds. But the Bitcoiners say, well, no, if you're going to have a large reserves, then you need to have good assets for the long term and all that stuff. And I would say there's a clash. The Bitcoiners are saying the choice is Bitcoin, but I think that the corporate sector would say, well, it's not our job to have large reserves. Maybe it's okay for Berkshire Hathaway, but for most companies, they make toothpaste. They should focus on making toothpaste. They got too much cash, give it to shareholders. So I think that companies are not the place to look. I would look at the asset pot, the 500 trillion of assets, particularly the allocators of those assets. Yeah, so the people that own the shares of the toothpaste company, that's the target, not the company itself, in my opinion.
That's an interesting one. Never looked at it that way. But I guess people like to have don't like to have even operating cash in US dollars because it's sinking away and they have to have some cash reserves and then they might look at 5% of the cash reserves can be in other things. But there are a bunch of companies that then try real estate, then try stocks and companies all of a sudden portfolio managers outside of what they're doing. It's kind of frustrating because money is so bad. They have to venture into, real estate and stocks and other portfolios, which is almost kind of sad to see. Would be cool in a Bitcoin only world where they just can have Bitcoin.
Can I ask a question to your next guest?
Yeah, I usually do it offline, but you can, if you already have it, you can give it to me now.
I just thought of it. Why? So to your next guest, why is Bitcoin so tightly correlated with technology stocks?
I like that one, tightly correlated, because it's frustrating.
It is.
Tech stocks. I like that one. Really cool. Before I let you go, where can people find you, ask you questions, and reach out to you?
Thank you, Robin. ByteTree.com. You can see it behind me, BYTE. That's like a digital money tree. ByteTree.com is my site. And then the other site you saw for the data on Bold and flows is bold.report. And then my Twitter handle is @AtlasPals. Feel free to reach out to me.
Really cool. Thank you so much, Charlie, for being on. It was great. Also, thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.